All right. So we have recording going, Eric?
We do.
Fantastic. All right, folks. Good morning, or afternoon or evening, depending on where you're logging in from. Um, this is Adam, and then today we have a guest speaker, Greg. Greg, I never pronounce your last name correctly, so he'll just be Greg from Tradervue for now. And and um, and so the way it's going to go is well, I'll give you a quick, just kind of the lowdown on how I met Greg, and then why he's even on today. And so, part of the brand for Indicator Warehouse over time is we've emphasized more the warehouse side of the brand and less the indicator, right? I mean, when we started out, obviously we were an indicator shop, but now we have education and variety of services, and the idea was to have this warehouse where everything you needed to succeed in day trading was all under this one, virtual roof, if you will. And so, uh, obviously, journaling is key to anyone's success, including in trading. I don't care if you're counting calories for dieting; it doesn't matter. And so we set out to build our own. And when I started doing my due diligence to see, what's already out there, I came across Greg, and quite frankly, it was clear that there's no way we could build something as good as what he'd done. So, can't build it, join him. And so I reached out to Greg, as a strategic partner. And as they say, the rest is history. One of the just interesting developments along the way is um, prior to Greg and us working together, the only way to get the NinjaTrader data into the Tradervue online system was a manual import. Nothing wrong with that. That's common industry standard kind of stuff. However, because I've always been really lazy about my journaling, I wanted to remove any obstacles whatsoever, and so we talked about creating an automated upload of the data so that you don't have to break your flow and write things down on a piece of paper, and it's just all waiting for you at the end of your trading day. So that's why we wrote the product called Journal Link, and it's that program that runs in the background that you got when you got the wrapper package, and it's what allows you to connect seamlessly, actually, to the Tradervue service. Anyway, that's it for me. I'll be sitting in the background answering questions if need be. I'm going to hand it off to Eric just to talk about journaling in general for trading, and then he will give it to Greg, and Greg will actually go into a demonstration of how the service works, um, and in particular how it works for trading futures, and one step further, how it's going to work in order to enable Eric to help mentor you, right? So typically whenever someone reaches out to Eric to ask a question, his immediate response is going to be, great, send me your journal. And so now, instead of taking screenshots of paper, we actually have an easier way to help each other. Okay, Eric, it is all yours. Thank you.
Yeah, thanks, Adam. And Jeff, we're going to have video here in just a moment. Jeff's saying I've got audio but no video. Um, when Greg takes over the controls, he'll do the screen share, but really right now there's not much to look at. Um, like Adam said, when people come to me for coaching or when they have problems with their trading, my first response is always, well, send me your journal. Let me see what you're thinking. And inevitably, I get a snapshot of the NinjaTrader breakdown, which of course tells you nothing about your journaling. A big component of journaling is the whole thought process, not just recording your trades, but also being able to record the reasons why you took the trade. And that's perhaps the most important reason for journaling. You know, we've all heard that statistic that 90% of traders lose money, but instead of focusing on the 90%, let's focus on what the 10% are doing right. Instead of focusing on why 90% of traders lose money, let's focus on what the 10% of traders are doing correctly to make money. And it's a fact that out of the 10% that make money, 90% of those traders are journal keepers. That one person, that 10% out of that winning 10% is either a naturally gifted trader or extremely lucky. And chances are that you are probably neither. So it's very much to your advantage to keep a trading journal. And the best thing about keeping a trading journal is that the results tend to be immediate. Uh, and by that I mean within a couple of weeks, certainly within a month of journaling your trades, you're going to start seeing results. You're going to start seeing patterns. You're going to start seeing things that you're doing right and things that you're doing wrong. And of course, the idea is that you do more of what is right and you do less of what is wrong. So journaling, I can't overemphasize. For those of you who join us in the trading room every morning, you know that I'm always making comments. I'm making notes in my journal while a trade is going on or shortly after a trade closes. You know, while it's fresh in your mind. I think those are the important times to be making notes about your trade and recording those results. And, you know, even having an opportunity to review them at the end of the session. It really is one of those things that takes no time at all, or hardly any time at all to do, and yet the benefits are huge. All right, so let me see if we can change the presenter correctly, and we'll get Greg to start doing his screen share. And hold on, Greg, before you get too far along here, I'm going to try to make sure I get the recording going
Okay.
on the window. Okay, we should be good to go.
Alrighty. Well, hi everyone. My name's Greg Reinecker. I don't have trouble with my last name, so I'll go ahead and hand it over to you. um, welcome. I'm going to try to walk you through Tradervue, give you some tips on how to use it, what you can do with it, and maybe a few random tips that I won't be able to help myself from throwing in about sort of keeping a journal in general and what some things you can do to get the most out of it are. So when you first sign up for Tradervue, you'll see a lot less stuff on your screen than you see right now. The first thing you want to do is somehow get your trading data into the system. If you have historical data you want to import, then you'll want to come over here and click Import Trades. And you'll select, assuming you're using Ninja, you'll select NinjaTrader from the list. And you'll see a bunch of instructions over here on the right side of the page. If you follow those instructions, you'll be able to import your data. The instructions, it'll take you much longer to read the instructions than it will to actually do it, so don't be intimidated by that. Once you're caught up and you want to sort of import your incremental data going forward, then if you have JournalLink installed, it's super easy. There's literally nothing you have to do. Once you have JournalLink set up, every time you make a trade in NinjaTrader, it'll be auto-magically imported into Tradervue. And you'll see it there almost immediately, so you'll be good to go. Once you get some of your data in, we'll go to the trades view, and this is basically just kind of a spreadsheet view, if you will, of your trades. So you'll see some columns across the top. Yours may be different than these. You can change them if you want to, but you know, the date, the symbol, how many shares of contracts you traded, your P&L, and so on. When you first import a trade and you open it up, it'll look something like this. It'll be kind of a bunch of blank space and some volume and P&L information over here on the left. So just going through this quickly, P&L data here, initial risk. If you're on the gold plan and you want to track your returns in terms of R, or how much you're risking per trade, you can enter in your risk value here. So if I'm risking $25 on this trade, I can enter that in. Once I do, I can see my return is calculated in terms of R as well as in dollars. I'll take that back out for this particular trade. Over here, I can add notes to a trade. And rather than bore you with watching my typing, I'll just switch over to another trade where I've actually typed in some notes already. So we will look at, say, this one. So here, you know, I typed in some notes about, you know, what I was thinking when I took the trade, why I jumped back in, and so on. The idea here is I want to make enough notes that it forces myself to actually think about it and sort of put my reasons for being in the trade actually into words rather than maybe some intuition I had when I started. And also enough detail that when I come back and review this, maybe tonight, maybe tomorrow, maybe next week, that I can remember this trade. I can get back in the mindset I was in when I made this trade and try and sort of have another perspective on how this trade went and what I did. I'll come back to tags in a second. What we see in the middle is the execution detail. These are the actual buys and sells that made up this trade. So you can see I bought 100 shares right at 10 o'clock, sold 100 a minute later, bought another 100 at 10:20, scaled out of that, and then at the very end I made a boo-boo and accidentally reversed my position, and then I closed out as soon as I realized what was happening. Right below that, we see some statistics about this trade, so MFE and MAE data, and also exit data. Again, if you're on the gold plan, we do exit analysis, and I'll come back to that in a minute and explain what that is. Down a little bit further, we'll automatically make some price charts for you on different time frames for when you are actually entering this trade. So if we look at the 1 minute time frame down here, you can see these green and red dots on here. So the greens are where I bought, the reds are when I sold. So you can see here, I bought in anticipation of a break of this 102 level. That failed, so I got shaken out here. Kind of let it do its thing for a little while, bought again at that same level, and then scaled out on the way up. So now, even though this trade was, many months ago, or almost a year ago actually, I can look at this and I can remember exactly what I was doing. I can read my notes and I can get right back in there and sort of re-experience this trade and try to learn from it again. I can click large if I want these charts to be a little bit bigger and see a little bit more time frame. You can also change the time frame on any of these guys. You can change to a different kind of chart, like a Renko chart or volume bars, range bars, and so on. You can add chart studies. So if I want to add a moving average or Bollinger Bands or whatever, I can add those on as well. If I click over here on the running P&L tab, this gives me context for the trade in terms of the whole day. So this day, not too much is going on. Let me see if I can find another trade that might show you something more interesting. It's a day where a bunch was going on. Oh, well, yeah, that didn't work. But anyway, so here, the running P&L for this trade, I can see this particular trade went to negative P&L almost immediately. And then here's the running P&L for the whole day over on the right side. And this yellow strip shows the time frame that this trade I'm looking at contributed to the entire day. So you can see sort of in context, how was I doing already? How was my intraday P&L at the time I took this trade? Because that, of course, can affect your kind of your mindset as you enter this trade and consider what happened during the trade. And then finally, let's go back to this one we were just looking at. The idea of entering tags, you can add as many tags as you want to a trade. And people tend to add, one of the first questions I get from new users usually is, what should I use tags for? And the answer is you can use them for anything and everything. I would say tend to be liberal on the side of tags until you get a feel for what you want to do. But the idea is I can take a particular trade and tag it with, for example, the setup I used to get into this trade. So in this example, my setup was, this was a breakout trade that I like to do. Or maybe it was an earnings trade or a momentum trade or a support play or something like that. I want to tag these trades with whatever the setup was. And if I click edit tags, of course, I can add some more like earnings and so on. And I might tag this with sort of my emotional state, right? If I'm really tired when I'm making this, or I'm unsure, or I'm super confident, maybe I'll tag those. Maybe things that are happening during the day, right? If there's like a Fed announcement or something, just a couple minutes ago when I made this trade, maybe I'll tag it with FOMC or something along those lines. Basically, I want to tag this trade with think of them as categories, right? Or things that I might want to come back to later and see, how am I doing on my earnings trades? Am I an earnings trading genius, or am I not doing nearly as well as I thought? And we'll be able to analyze that data later. So, and again, we'll revisit this in a couple minutes. So, back to the trades view. And again, this is sort of that spreadsheet view of all your trades. And you can see, for example, here's the one we were just looking at right here. There's a few things you can do here. So right now we're looking at 2,400 trades, over 10,000 executions. Maybe we want to filter this down. Maybe I want to look at just, say, Apple trades. So this gray bar at the top of the screen is a filter bar, and I can change any of these fields. So I might enter Apple, and I'll click filter. And now I'm just looking at trades I've made in Apple. And now we're down to 61 trades. And you can filter on lots of different things. So I'll take my Apple filter off, and I'll tag on, say, breakout trades that we were looking at just a minute ago. So I'll enter breakout and filter, and now I can see just the trades that I've tagged with breakout. Or I could do the same thing with, earnings, or so on. Basically any of those tags I've entered. Or I can do multiple tags, right? Like earnings and, TMAR. So then I can see just trades that happen to have both of those tags. I can look at just long or short trades. I can look at intraday versus multi-day trades. I can filter on just a certain date range. So if I want to look at trades that I've made just since, February 1st of 2016 or something like that, I can do that. So filters are super important, especially when you get to the idea of filtering on tags and things like that. You can really drill down into your trades and find the ones that you want. If you click this little gear icon, there's a few different settings you can make. So for example, I can go to a chart view. Instead of that sort of Excel looking view, I can see small charts of all those trades that were on my front page there. I can switch my P&L view between gross and net. I can change what columns I have displayed and so on. Next, we'll go to the journal view. So if I click journal view up here, this is a different kind of view where basically each trading day is grouped together. So instead of just looking at a list of trades, now we're looking at a list of days. So you can see on this particular day, I can see my running P&L on that day. So not the happiest day in the world, for sure. I can see how many trades I made, how much volume I traded, what my P&L was. And then down here, I can see an actual list of the individual trades I made on this day. And each of those have their own notes and so on as well. If I scroll down a little bit to find one, here, here's another day, not such a good day, obviously, where I actually made some notes on this particular day, right? Sort of, I mentioned that I really need to work on these momentum trades. This is sort of whole day kind of notes, right? So I made notes on the individual trades, and maybe I wasn't happy, or maybe I was happy with some of them. But as a day, I had some thoughts that I sort of wanted to capture, so I did that. If you click Edit Notes here, for example, you can enter in whatever notes you have for the day. So this is super handy, obviously. I mean, the more information you can record in your journal, the more value you're going to get back out of it later, right? So I would tend to err on the side of make notes for every single one of your trades. Why did you enter this trade, right? If you don't think you have a reason, if you're just not sure why you entered or something, I would argue maybe you shouldn't have been in that trade. But in any case, write that down, right? Write down. I'm not exactly sure. I have a feeling about this, but I can't put my finger on it. If that's the case, write it down. So if we flip over to the dashboard, this is the first page you'll come to when you first enter the system. It's pretty self-explanatory. One thing you'll see down here where it says recent activity is if you have a mentor, which you will, and Eric has made some comments on some of your trades or something, you'll get an email notifying you that he's left a comment there, but you'll also see them here. So if you lose those emails or they go in your spam folder or something like that, you'll be able to see a big list of all the things that, that Eric has mentioned on your trades. So that covers a bunch of the sort of journaling part. But now that we're going to all the work to put our data in this journal, let's see what we can actually do with it in terms of analysis. So if we click on Reports View, we'll look at some charts and things. So the first place you'll get, these are tabs across the top here. So we'll start out on the Overview tab. And what we're looking at now is just recent performance, right? This is sort of some low-hanging fruit, but it's a good visualization of what's going on. So, I can see my P&L over the last 30 trading days, cumulative P&L over those same days, how much volume I traded on those days, win percent. I can flip this obviously to longer time frames if you want to. I can go to year, month, day group here, and then this is sort of this particular one. This is sort of data that your broker could probably give you. Realized P&L by year, by month, by the day of the month. Pretty basic stuff there. It can be super useful if you need it. The calendar view is definitely interesting. So now we're looking at a calendar of 2016 right now. If I pick a certain month, like February here, and click on that, I'll see the calendar view of that. I can see the green days had positive P&L, red days negative, blue days were 0. Gray trades, no trades. Sorry, gray days had no trades. Super, useful view if you want to just get a quick glimpse at, how did the month go, or which day was that I made these great trades. If you click on one of these, you'll actually go to the journal view for that particular day. We'll go back to the reports. So those were the overview reports, and this data, it's going to be much more interesting for you when you're looking at your own data rather than looking at some strangers who you have no idea what they were trading or why. So definitely hop in here as soon as you get some data loaded up, and you'll probably start getting some insights into your performance right away. Let's flip over to detailed. Now we're getting into some sort of pretty detailed stuff. I'm going to come up here and turn my filter on for just intraday trades and click filter. And you'll see this data in the table just changed. This filter that we use to filter out trades in the trades view works across the system. So if I filter to just intraday trades here, then the reports are only going to show me intraday trades. If I were to filter on just a tag, I would see reports for just that tag. So down here in the stats, we'll see, total P&L across the trades we have selected, total commissions and fees, what was my average MFE and MAE. Lots of great data in here that you can take a look at. And then down here, we get into some really detailed data about our performance. So here's what was going on. We can break it out by day of week. So here's the number of trades by day of week, and then here's actual P&L performance by day of the week. We scroll down a little bit more, we can go by time of day. So here's by hour or by half hour, 15-minute windows and so on. Performance by month, by duration. You can see by duration there is no multi-day P&L here because I filtered it out. Performance by intraday duration. How long was I in this trade? And interestingly, you can see there's a hard delineation here, right? Trades for this particular data set, trades under 20 minutes were consistently losers. Trades over 20 minutes were consistently winners. That gives me insight, right? The trades I thought I was making, where I'm hopping in and out, and I'm like a master day trader. Apparently I wasn't as much of a master as I thought. These different groups will give me different views of data. So I'll click on, say, price and volume. And now I can see, my performance by the instrument price I was trading, or the range, how much did the price swing while I was in the trade. Click on instruments. I can see my best and worst symbols that I was trading, performance based on how much volume did that symbol do, or how much relative volume did it do relative to what it normally does. So this is another good one, right? When I was trading instruments that were trading less than their average volume, those were not good. When I was trading instruments that maybe they had some news or something and they traded between 100 and 500% of their average volume, then I was trading much better. Performance based on how much did this gap up, or was it a trend day, was it a range day, that kind of thing. And actually, for all these reports, there's always a help link at the bottom. If you click that help link, we try to be as specific as possible with what's being shown there. And so if you have a question about a report, start with those and start with the help link there, and that'll give you a bunch more information about it. Market behavior, this is a good one. You can pick a proxy for the market. So we have, a bunch of different ETFs you can use for a market proxy. And then you can do reports based on, was the market up over 2% that day? If so, the trades that I made on days where the market was up over 2%, how did I do? Or did the market gap? Or did the market have a trend day, a trend up day, or a trend down day? That kind of thing. Oops. Win-loss expectations is sort of basic info, but it does give you, for example, a cumulative P&L chart of all the trades matching the current filter. Also cumulative drawdown. Liquidity, this is more of a stock thing, so I won't spend too much time on it, but this is based on whether you're adding or removing liquidity as you execute your orders. And then back up here to some of the other tabs. Actually, before I do that, there's some settings up here on all the reports. I can either run aggregate P&L reports, in which case we can see, total gain for all the trades I made on Monday, so it's, X dollars. Or if I switch to per trade average, then I can see, the average trade made on a Monday had a P&L of $0.9. I can switch the report setting between gross and net. I can also run reports in terms of dollars, in terms of ticks, or in terms of R, if you're tracking your R. If you are tracking R, if you find that interesting, this is super handy. I mean, literally any of the reports in the system can be run in terms of R rather than in dollars. So essentially, this allows you to report on performance while normalizing out your position size completely and looking just at risk. Win versus loss days, look through these quickly. This basically compares trades I made on winning days versus trades I made on losing days. And again, it has all these different reports available for each of those. Compare lets you compare any two sets of trades. So there's you can set up whatever you want down here, or you can pick some quickies up here. So for example, if I want to look at long versus short trades, I can do that and see statistics for either one. And again, all these different reports are available while doing this comparison. The tag breakdown is interesting. Remember I was saying earlier, use your tags liberally and, tag for things like, the setup you used or maybe the source where you found the idea for a trade or something like that. Now we get to see the fruits of all that labor. So here's sort of total performance broken out by the tags I used. So some of this looks fine, right? But if I click per trade average, which might be more interesting, might not, and we look at, say, earnings, right? I can see that, the average P&L for an earnings trade in this data set was not really so high, right? Compared to maybe, momentum trades or something like that. So I can really look at these, compare my different setups, and, try and understand what's working and what's not for me. And then finally, advanced, this basically takes any two data points and plots them against each other. So we will look at, for example, well, here we're looking at P&L by trade duration. So you can see every single trade in this data set is plotted on here. The y-axis is P&L, x-axis is the duration in minutes. You can have an option to scale the data points, so the bigger dots are bigger P&L. There's lots of interesting stuff you can do here. So for example, here's a liquidity report that we have memorized. You can actually use this. Sorry, I always hate it when someone coughs into their microphone. You can actually use this to analyze your stops, for example. And we have a couple of blog posts about that, showing examples of doing stop analysis based on these reports. I'll find a link for that and I will send it to Adam to send out to you guys. I could probably just do it. Look at position MFE, and I'm going to switch this to be just trade index, which will just plot everything out in an even manner across the x-axis. And then I will scale my data points. So what we're looking at now is a good example. So trade index, again, I'm just trying to space them evenly across the x-axis. Position MAE is how much did a trade move against me during this trade, right? So you could see here, right, for example, this trade moved, almost $300 against me. So obviously my stop was, around the $300 area. But if we were to draw a line in here somewhere, right, you can actually look at this and say, if I would have had a hard stop set at $150 per trade, then these big red dots that had significant negative P&L could have been avoided altogether, right? Those could have been smaller P&L excursions here. So again, we have some blog posts that really talk about this in more detail and what you can really get out of this and what you should sort of, what's more like noise. And I will, like I said, send those to Adam. There's some trend reports here as well you can look at. But just for fun, I'm going to take you through a scenario, and this is going to be sort of more of a stock-based scenario, but you'll get the idea and you'll be able to do something similar for your futures trades, just looking at different data. But again, so let's say I wanted to analyze what was happening in the opening hour. So you can see I made a lot of trades in the 9 to 10 o'clock hour. So clearly I spent a lot of time focused on the open. And what I really want to do is see, how did that really go, right? I mean, I can see the performance here, and it was all right. But what really happens? So I'm going to click on this bar, this 9 o'clock bar right here. And I'll get a prompt saying this is going to change the global filter to just show trades that were in that bar. So I'll say OK. And now up here in the green filter bar, green means it's filtering. I'm looking at intraday still, but I can also see open at or after 9 o'clock and before 10 o'clock. So I'll go back to the reports. And now we're looking at just those 9 to 10 o'clock trades, and we can see, obviously we only have this one bar now. And now, looking at the day of the week, we can see things were significantly better on Mondays for some reason than all the rest of the week. So, maybe I just get more sleep on weekends or something, I'm not sure. But let's click on this and try to drill down into those Monday trades and see what might have been happening there. So I'll click there. I'll click OK. So now we're looking at trades that were open on a Monday between 9 and 10 a.m. So instead of the 2,000 some trades we had before, we're down to 119 trades that we're going to look at. We'll go back to the reports. So now these two charts obviously much less interesting because it's only Mondays at 9. But now we can start flipping through some of the rest of the data and try to gain some insights and see what we can learn about what happened during this particular time of day on this particular weekday that tended to be better than other days. So, and what I'm going to do, we could look through all this and sort of, give some thought to what it actually means. I'm going to click on liquidity, just for grins. And the idea, if you haven't traded stocks before, the idea with liquidity, right, is you're sort of, if you bid for some stock, for example, like a limit order that's not immediately able to be filled, then that's known as adding liquidity. Your order is basically added to the order book and it sits there waiting to be filled, perhaps. Removing liquidity is basically, you could think of it like a market order, right, where you're basically, you're paying that offer or you're hitting that bid to immediately execute your trades. So what jumps out at me right now is the performance is dramatically better when I'm entering by not adding any liquidity. What this means is I'm basically jumping into these trades very quickly using a market order to get filled immediately, rather than trying to mess around bidding for some stock here and hoping I get filled. But we can also see, well, there's a whole bunch of trades here as well, so we don't really know if this blue bar means it was better on average or if it was just slightly better, but I did it enough times that it finally added up to something. So I'm going to come up here and switch to per trade average. And now we'll go look at that. And now we can see this bar, it really is significantly better than all the other bars. So what does this tell me? Well, it tells me that, on those Monday mornings when my performance is tending to be better than other situations, I'm being very aggressive jumping into my trades. I'm entering here with a market order. I'm trying to execute immediately. And that is working better than when I'm trying to bid for some stock. I'm trying to be cute or I'm trying to be tricky. So now I could go back, right, and look at, well, what about the other days? How am I doing it differently then? Is liquidity really the thing I'm doing differently? And I can try to understand and take some of that data and leverage it into, how am I going to trade tomorrow differently than I traded today? So those were most of the things I wanted to cover. Let me give you a quick 2 or 3 quick things you're going to want to do as soon as you sign up. First of all, when you do your imports, if you're trading with multiple trading accounts, it's important that we keep those trades separated in Tradervue so that, if you happen to buy, one contract in one account and you sell that same contract in another account or something, we want to make sure those executions don't get merged together into a single trade. So to do that, we want to use what we call account tags. If I enter an account tag in here, like TMAR or T, this is my tag I use for a margin account. Basically, this means every tag I import will be tagged with margin accounts and will only be merged with other trades that are tagged with that same thing. It's the way we separate accounts. If you are going to use multiple accounts, I recommend you come in here when you do your first import, enter an account tag, and check this box to require an account tag for every import. If you're using Journal Link, when you set that up and you're entering in your Tradervue credentials and stuff in the setup, there's a field there where you can enter in your account tag. You'll want to enter in the same one, like TMAR, if that's what you're using. If you're not using multiple accounts, you don't have to worry about it, so you can just leave both of these blank. So setup item number 2, if you're trading futures, let me actually go back to a trade and I'll show you what I mean. If we look at this Facebook trade here, you can see that I bought 100 shares, then I got flat, then I bought another 100 and I got flat, and then I actually reversed and got flat. By default, the way the importers work is they will group trades together into the same trade if it's within a certain short amount of time. So that's why, buy and sell, and then 19 minutes later I bought again. By default, that'll all be grouped together into one trade, as the system assumes if it's only 19 minutes later, you're probably still in the same, the reasons for you entering this trade are probably the same as they were before. It's probably all part of one sort of mental trade for you, so it's grouped together. What we found is in general, our futures traders would prefer to start a new trade every time they get flat. So it's really easy to change a setting to do that. So from the dashboard, click Settings, go down to the Trade Settings tab, and you'll see there's 3 settings up here. Normal is what I just described. The second one is Merge when possible. This creates as few trades as possible. That's not probably not what you want. The third one is Split when possible, which creates a new trade every time you get flat. So you'll just want to check Split when possible and then click the Update button down at the bottom. You should do that before your very first import. That way you won't have to worry about manually splitting up any trades, and that should work for you. And then the last thing I wanted to mention is, since you're going to have a mentor in Eric, you'll want to invite him as a mentor to basically have a view of the data in your journal, right? So you have a view of all of your private data. Obviously, you can edit it, you can make notes and such. If you invite Eric as a mentor to see your data, he'll be able to sign in with his account, and he'll be able to have a read-only view of your trading data as well. And he'll be able to, once that's set up, he'll be able to look at a trade, look at the comments you've made or the notes you've made on a trade and such, and he'll be able to leave comments there, and you guys can have a conversation about, on this particular day, here's what I think I did well, here's what I think I need to work on, and so on. So to invite him as a mentor, you'll want to click Settings, you'll go down to Mentor Settings, and you'll invite him. And you just need to enter in his email address here and click Invite. And he'll get an invitation. Once he actually accepts your mentor request, you'll see that on your dashboard here under Notifications. And then don't be surprised to see comments and such left on your trades and journal entries. I think, yeah, let me just leave you with one more thought, and that is on sort of on another way to sort of use your journal. So I'm going to click over here to a trade that was made way back a long time ago. I made a bunch of notes on here. If we look at the 1 minute chart, you can see I bought down here, sold sort of at the top of this range, bought some more down at the bottom of the range, and then for some reason, some unknown reason, sold immediately and missed out on this dollar move. One of the things I like to do with my journal is, basically come back to it later and try to relive this trade again. So, and there's a saying for elite performance, you need to sort of get 10,000 hours in or 10,000 repetitions in or something like that. And it takes a long time to make 10,000 trades, right? And if you're not always profitable, it's going to cost you a lot of money to make 10,000 trades as well. But what if we could make one trade and get more reps out of it, right? We can experience that trade more than once, and sort of when we're adding it to our list of 10,000, we can count it more than one time. And if you make sufficient notes, so you can really get your mindset back to the point where you were when you made that trade, and you have price charts showing you exactly what you did. And if you annotated some charts or something, add those into your journal here. Anyway, if you can go back when you're reviewing your journal and sort of relive this and re-experience it, you can get more experience out of it and you can learn more from it. And then the last thing is I'll mention is that one thing I like to do occasionally in my journal is sort of run a scenario through my mind, right? So here, I had a fixed risk amount in mind, but how could I have made more money on this trade given the mindset I was in at the time? Was I nervous? Was I having a down day? Something like that. And given my risk parameters, I don't want to increase my risk to $500 on this trade if I initially was only risking $25. But given my initial risk parameters, what could I have done to make more money on this trade? And, here, well, you could look at it in a pretty obvious sense, right? Well, I should have bought where I bought and I should have sold up here at the top, right? That's easy to say. But again, if we get back in the mindset of where were we when we made this trade, well, I bought right here, but it wasn't clear what it was going to do. So I wanted to sell and reduce my risk in this trade. So, I could walk through a scenario, right? Maybe I bought here, sold somewhere I did. It came back down and touched the same level, but it didn't break it. So maybe I could have rebought what I just sold and again, sold it right back up here, right? Again, so now I'm reducing my risk. Maybe I'm down to, $10 of risk now from 50 or something like that. So anyway, then I would just walk through another scenario. And maybe I bought here where I did, and now I know my risk has been reduced because I booked a little bit of profit back here. So rather than selling here for some unknown reason, maybe I sell a little bit here at 20 or 50 or 52. Basically, think about your trading plan. Think about the amount you have at risk, and then walk yourself through the scenario of how could I have made $500 on this trade instead of 50. Walk through the scenario, see if you could have done it, and that almost gets you in the mindset for next time you make a trade. I remember this other trade that I could have done this on. Maybe I'll change how I'm thinking about this trade that I'm in right now. So anyway, that's all I can think of at the moment. If there's any questions, I am more than happy to answer some.
Hey folks, it's Adam. I'm going to step in for a second, Greg, and just some comments while you were talking, and then if some questions come in, we can address them. And Eric, obviously, I want to hear from you. So some things that were going through my mind while I was listening to this, and in particular how it can help for what we're doing right now in the room, specifically for the new Raptor owners who have the new setups that have been codified for 3 specific alerts or setups. I would highly recommend that you go and set up those tags immediately, and so that when you take one of those 3 setups, you tag it. It's tagged accordingly, so that you can then go back and do some analysis on the different setups and how they're performing. That's like right off the bat a plus. And for our DTS owners who don't have that functionality yet, obviously Eric still defines the setups in the room. They have names, and so I think it would behoove us to come up with some kind of naming convention so that you can do the same, for the DTS trades. But at the higher level, right now our focus in the room is this account growth. And for those of you that saw the recent presentation we did during the Raptor 2 promotion, I introduced this concept that day trading is actually a deceptive term because it's really not about the day at all. It's about the bigger picture, week, month, or even year. That's really how you analyze your growth for your account and for yourself as a trader. And so having this kind of data, I mean, I don't know about you guys, but sometimes when I'm trading during the day, forget the forest and the trees. I feel like I'm in the bark. And so you just lose perspective. And having this kind of data is critical for you to pull back and see how you're doing, because I think a lot of us are really hard on ourselves, especially newbies who think that they have to be profitable every day. No, it's not possible. Forget unrealistic. It's not possible. The question is, am I being profitable or improving over the weeks and months? That's how you know, just like in any skill or profession. And so without this type of data, I just don't understand how you would be able to judge your performance correctly, let alone let Eric or someone like Eric, help you improve your performance. So this is great. I love this. Just one plug, the little selfish thing for me. I have a deal with Greg that if I can get enough business brought to him, I may be able to twist his arm to create a special bar type so that we have the mean Renko bars in the bar choices. But obviously that has to be cost justified on his side. I get that. But probably the closest to what we're doing right now would be the mean Renko bars. If you just want for a visual representation of what we're doing. Yeah, I'm trying that's it from my side. Eric, anything on your side?
Oh, wow. The software is so powerful. It's amazing. I really like a comment Greg made toward the end there about the reflection, how much you can actually learn. Forget the information I can provide for you, but the fact that just taking a moment, reflecting on your trade, thinking, what could I have done differently to, maybe make the next trade a little bit more profitable, or to make the next loser a little less painful. Those moments of reflection, those are huge. I really love the chart that Greg showed. Looked like it had all those bubbles on there, but where it showed how far the market moved against you, that's perfect for optimizing your stops. And, that's something that a lot of traders never take the time to figure out. That's probably one of the biggest questions I get too, is where's the best stop placement? And you can see all those green dots were your profitable trades, and all those red dots are your losers. And so you could see the vast majority, or all your winning trades required only a $150 drawdown against your position. So that kind of information is really hard to get anywhere else unless you journal this kind of stuff, make notes of it. So yeah, it's pretty impressive software, to say the least.
Yeah, I know we advocate for a different stop strategy than typically what you hear out there. Of course, that does go back to Eric's comment about doing what the 90% of the losers do versus the 10% of the winners. But it's always hard to empirically prove that, because a lot of times people find Eric's stop strategy uncomfortable in the beginning, because they just think intuitively it goes against what they've been taught. And so having this kind of empirical data to show that yes, actually letting your trades breathe is a more profitable approach than keeping them too tight and choking out is great. Now, what I love about this is real time, right? I mean, yes, there are back testing tools, and you guys know we have a great one, but this This is analyzing the real world from your eyes, if you will. Because I always think of trading, the best analogy I've ever come up with is it's a craft, which means it's part science and part art. Um, the quest is always to have as much control over the science part as possible because it's the art part we can't. So this is just one more step to having more control over your trading. Basically, the more knowledge you have, the better you perform. So this was great. Thank you, Greg. I really, really appreciated it. Um, Obviously, well, if you guys haven't worked with Greg yet, he we give stellar service, and I'm incredibly proud of it. I have to say that Greg shames us. Not sure he ever sleeps, so there may be a vampire element here. But anyway, but he's incredibly responsive and just a pleasure to work with. So, if you have any questions beyond what we can address, he'll, obviously as a customer of his, he's incented to support you accordingly. I think that's it. Anything else? Let me just check the group real quick. No, I think it's always a good sign, right? If there's no questions, that means we were thorough. I think that's it. So I want to thank Greg for joining us today. My guess is once everyone becomes more comfortable with the tool, we can invite him back for maybe either more specific questions to what we're doing as a group, or more advanced ideas for what we're doing as a group. But at this general level, this should get us going. So thank you so much, Greg. Really appreciate your time.
Great. Thanks, guys. Thanks for having me.
All right, folks. Eric, so are you? Forgive me, I don't remember the format. Do you now take over here and it's a regular presentation, or what do you do?
Yeah, sure.
All right, guys. I'm going to dive back in. Obviously, I've got a lot of work to do in the back end. Some people were asking me about the new Trade Manager version. I'll remind you, if you already own Trade Manager, it's already waiting for you, the new version, in your member area. And so the primary thing to know is that functionally nothing has really changed behind the scenes. It's more of a visual redesign from people asking for some, basically to make it easier to use. The only functional piece that has been added is that panic button you see at the top, which basically just flattens all of your positions that are open at one time, if that's necessary. But to be fair, we haven't updated the Trade Manager manual yet to reflect these changes, so it's on my to-do. Just understand that functionally, if you go back and look at the other manual, all that function is still there. And what else did I want to tell you about that? I think that's it. Okay, folks, have a great time. You always know how to reach me, adam@indicatorwarehouse.com, or if you want my direct line, I think you all have it by now, 713-893-8556. And I will talk to you all soon. Thanks.
Okay, let's make sure we got everything working here correctly. Can I just get a sound check from everyone and make sure you're seeing the screen? Okay, fantastic. All right, so let's just take a look here what we got going on this morning. It looks like the market's still kind of moving sideways a little bit. Taking a look here at the Eagle now, you can see trading left off here around the 50, 63, 64 area. Very, very quiet in the overnight. That's quite unusual. Market opening with a slight gap, filling that gap, and now we're coming back. Actually, this is our first with trend signal, our first in sync signal on the Eagle, which tends to be a pretty significant signal for us. This is normally a trade that we look at taking. We may even have a second opportunity to get in on this one, a second push entry, waiting for the ATR bar or the ATR line to switch over. This effectively becomes our signal bar now. And let's see, what is that going to cost me to be wrong? What I'm looking for is I'm looking for this bar to flinch a little, to move away. No. Okay, so we'll just wait for that. We'll take a look here at the Raptor, and you can see that we had a hard edge bounce print. My only concern at this point would be that whether or not this is going to turn into a test of the extreme. Oh, okay, hold on. There we go. Thanks, Francisco and Daniel. He said the screen was paused, so hopefully this will be better. So what I was looking at here is the eagle signal. This red bar buy. It was against the ATR when it printed. So a lot of times we'll use the ATR line here as a added filter. So this effectively becomes the signal bar. But because it may turn into a test of the extreme, I'm opting for a second push entry. And all that means is I allow the market to retreat to show me the current limit of the bar, and then I would look to enter above there. So that's what I'm trying to do there on the eagle. Here in the Raptor, we had a hard edge bounce signal print. You could do the same thing here in the Raptor if you wanted. You could use a second push entry opportunity. Looks like our first profit objective would be near the high of the morning. And of course the danger here being possible retest of the high and a failure. But they're still kind of bullish. The hard edge bounce, of course, would be the ideal signal to buy because it gives us a little bit more room before we start getting near this resistance. Makes it a little bit easier to take profit, or at least get the stops up a little bit. Okay, so it looks like the market fading a little bit from the resistance zone. And we can probably scrub that signal now. And wait for a better opportunity. The markets have been very, very sideways lately, which makes it a little bit more difficult to trade. Yeah, like Andrew says, zero follow through. Yeah. Andrew says if this keeps up, I'm going to have to go get a day job. So just support your habit. Well, it's mildly bullish, but again, we're not getting any follow through here. Craig, there's a cosmetic upgrade coming here on the Trade Manager. Craig's asking, is there a way to highlight the set prices and submit button? This was my rant the other day, that ever since the Trade Manager came out, and this shows you how much influence I have, I've been asking for different colors. See, then they'll even do this, and they'll give you the same color button. And for a while, the submit button was the same color as the accept button. And I kept telling the programmers, I don't care what color it is. I don't care the color. Just make it easy for me to find. I don't care if you put green and purple beside each other. Just make it easy for me to find. So there is a cosmetic upgrade on the way. And while I think of it, I will remind Adam. Jeff is asking regarding the journaling presentation, where can you get more information? The best thing to do is email Adam. I think Adam forgot to mention where you can get a link to more of the information, how to contact Greg. So just send an email to Adam and he will get you squared away. We'll take a look here at gold. Andrew says gold gave a number one that looked to be a high probability trade but failed. Can you take a look at that? Absolutely, we can. Tony says, first journal entry, market sucks. Yeah, it's been testy. All right, bear with me here as the charts load. All right, so let's take a look here. So it was probably this signal right here that Andrew's referring to. I'm not entirely sure why my number one isn't printing here, but this is a number one. Yeah, that's the one Andrew says. Okay. So when you first encounter a signal like this, and you say, okay, what did I do wrong? That trade should have worked out. It's usually one of two things. It's either market context or it's stop placement. So usually the culprit is stops are overly tight. Oops. So usually the culprit is I get in here, I place my stop just above the signal bar, the market thrashes about a little bit, and it stops me out. That is the normal culprit. Now, admittedly, in a market like gold, you may not be able to cover the trade way back here above the last swing. Ideally, I like to go even as far as 2 swings back. The chances that the market is going to recover 2 full swings is extremely remote. But let's say we covered the trade back here above this swing right here. You can see that so far, this isn't a losing trade yet. Your stop would have allowed you to at least ride out the first swing, and now you could be in a position where you may choose to, I don't know, maybe bring in your stops above every candle that has a bit of a wick to it. And you would have reduced your initial risk substantially. All right, so that's usually the first culprit. The second culprit for a signal not working out for you is market context. If you have a market that is decidedly sideways, which gold seems to be right now, you shouldn't expect extraordinary follow-through on any one signal until you get out of that sideways range. So it's looking like gold is trading in, pretty much a sideways range, something like this, and we're producing a signal near the bottom end of the range. Well, that explains why we're not getting the follow-through. You've heard me say this before, the best way to trade a sideways range is actually to let the market get outside of that range. Let me make these a little wider. Let the market get outside of this range, retest, and then come back. Then you can look for that signal. These types of trades are the ones that are going to get a little bit of momentum, going to have a little bit more follow through. So, Andrew, it's not that it wasn't a valid signal. It wasn't that it was even not worth taking. It's a high probability signal. It is worth taking. But when you're looking at the overall market context, it may be a situation where you're going to say, all right, maybe I should dial down the risk amount. Maybe I should only risk 1% of my capital on this trade instead of 2%. And so you'll look to take the signal like this and try to cover as deep as you can. And sometimes the trade manager is going to say, nope, sorry, for 1% of your capital, you're not going to be able to pull that off. So let's say we do it for the full 2%. No, can't even do it at 2% of my capital. So maybe it's a trade that I just have to let go by. You know, there's that expression that I quote from time to time that I'd rather be out of a trade wishing I was in than in a trade wishing I was out. Yes, you know, it's setting up. You may think, oh, it's a high probability trade. The market's just going to fall off the map here. So I'm going to take it anyway, even though this is all I can afford stop-wise. And then, of course, what happens is you end up getting stopped out. The other thing you could have done is you could have done a second push entry on the signal. I'm not sure it would have helped you here. The second push, just allowing the bar to engage the signal and then retreat from it. But I don't think this was enough to actually hold you in. No, they dipped down one more time, just for good measure. So when you're getting these signals, like I said, you got to take the overall context into consideration as well. If the market is sideways, it's going to struggle sideways, even with a high probability signal. Now, if we identify the markets in a trading range, and let's say we get a hard edge bounce signal to buy down here somewhere, well, then there's a pretty good chance that the market's going to try to test the top end of the trading range, right? This is what ranging markets do. They'll test the bottom end, then they'll go test the top end. Then they'll come back and test the bottom end until we get that eventual breakout. There is one other strategy for trading in a defined trading range that I don't do very often myself because it's a little bit more predictive in nature. But you can change your order style to a limit order. And I would recommend going here to manual mode and setting your quantity, probably just add a single contract. And what you would do is you would buy near the lows. So let's say we're going to buy down there, and let's say we'll cover the trade below the next support area. I would also recommend running a profit target and maybe even a scalping target. This is definitely the type of trade where you just want to get in, you want to get out. You don't want to press your luck. So the idea is the market's going to come down, retest support. You're going to look for a little bit of a reactionary move here. And likewise, as it starts to trade near the top end of the trading range, you'll try to do the same thing. Maybe you'll try to short from the primary support, and maybe you'll allow it to the next resistance level. So what you're doing is you're anticipating that the market's going to react somewhere in this range and then hopefully give you at least a little bit of a reaction lower. And again, I would probably dial down my profit objective because this is very much a scalp type scenario. You don't want to get too aggressive here. because somewhere through here, the market will eventually break out and it will come back for a retest. And if it retests deep enough to find your profit objective, fantastic. But sometimes you may just be able to get it back to break even, and then the market's going to turn and try to head higher. All right, so I hope that answers your question, Andrew. It's a balancing act, though, trying to keep your stops far enough away so that you can at least have a chance to realize profit. Yeah, Andrew says, what I see is that a lot of these signals are perfect for going the opposite direction. Um, Sideways markets, right? When the market is congested, when it's drifting sideways, you do need to exercise a little extra caution, dialing down the risk amount. You know, we are experiencing a bounce here off the hard edge. This is a valid number 3 signal. In fact, what I'll do is I'll set it up and we'll kind of play it in hindsight if they get back up here to engage the signal. But like I say, it's a sideways market. If I can take 2 contracts on this, I'll probably just take a single because I recognize that the market is very sideways. Now, what I'm doing here is I'm trying to simulate this bar right here, this entry. I don't recommend reusing a signal like you see me doing right now. Stephen, yes, good point. Adam and Greg forgot to get into the pricing of Tradervue. I do believe there is a trial version, and there may even be a free version, but don't quote me on that. I'm pretty sure there's, at the very least, a trial version. Again, those types of questions, you're best sending them to Adam. He has all that information. All right, so had we entered here, now we're getting a second attempt by the buyers to rally this market. At this point, especially if I can get one more bar in my favor, I'm going to start rolling my stop up. And actually, if I get this bar moving against me, I'm probably going to move my stop up. So why don't I move my stop up? All right, we'll go with the ATR strategy. There we go. So what I've done is, even though my initial risk was down here, I've effectively cut my risk in half. So whereas I was initially risking approximately 1% of my capital, now I'm risking only 0.5% of my capital. So like I said before, these are the types of trades, if it doesn't work out, these aren't the kind of trades that are going to ruin your account. Yes, it's unpleasant. So we're getting a little bit of a sideways action going on here. Yeah, a few of you are giving me the links here to the Tradervue website. And apparently there's pricing information at the website as well. Whether you choose to continue with Tradervue or journal on your own, it is important though. Really it is. It's perhaps certainly the cheapest thing you can do to improve your trading. It's one of the most effective ways you can improve your trading. And yet it's so surprising how few people actually do it. And you can see the market's just painfully slow today, which is surprising, I have to say. Oh, looks like the new, I texted Adam, and it looks like the new trade manager is going to be online in the next few days with the colors. All right, here we may have to just give them a little nudge higher, just a little push. A comment about the high probability signals as well. They are high probability, but that doesn't mean they're right 100% of the time, unfortunately. Market's certainly balanced at this point. You know, I would almost even consider putting a buy order above here and a sell order below here. You could bracket it. Andrew says, this makes watching paint dry quite interesting, spectator-wise. Yeah, if we didn't have money on the line. Oh, dear. All right, starting to get a little bit of follow through now. And if you were anxious about this trade and you're thinking, okay, maybe it's going to get knocked down here again, you can certainly bring your stop order here below the primary resistance line. That's this blue line. I know it's a little difficult to see. We got a lot of blue on the chart right now. But you could bring your stop in below that primary resistance line. And that would effectively cut your risk in half again. So whereas I initially started the trade about 1%, now I'm risking about 0.5%. Bringing my stop in there would only be risking about 0.25%. And of course, there's, well, $10 is not really worth it to punch out for $10. Not yet. But you can keep an eye on your profit as well. When you're up to around $50 or so, you may choose to scalp out with that. That's the other thing, talking about market context. When the market is sideways like this, there's nothing wrong with running a tighter profit objective. Yeah, Andrew says crude oil is quite constipated as well. Crude oil, he says, done 68 tick move all day. Where are the other 100? Ain't that the truth? Crude oil, here's crude oil on my Hawk. I've got the day ranger on the Hawk, and yeah, 68 ticks. Crude does tend to average about 100 ticks or so on the day. You can see the 30-day average, 105, 5-day average, 106, 10-day average, 95. So they're all around 100 tick day, but today, incredibly quiet. I don't know if that's due to the crude inventory out tomorrow. Seems odd that they would be slowing the market down already. Come on. No. So they're really starting to flounder now. There comes a point where I kind of give up on the market. If the buyers aren't going to rally at this point, in other words, if the seller's going to knock it down again, there's a pretty good chance they're going to go hunting for the lows, and more than this low right here. So there's a couple of things you can do. You can shoot yourself a trend line and place your stop below the trend line. I placed mine just below the low of this bar. So it's really their last chance. I can use my handy dandy logic counter and see that the bar will finish at 169.75. So I rolled my stop. Sorry, I said 169. 50.69.75. I rolled my stop into 50.69 half. So just below there. And obviously, these highs right here being a little problematic. Stinkers. just getting knocked down again. They won't breach that 50, 70, 74 area. Come on. Just one more bar. Give me one more bar and I can get this trade to break even. What little momentum there was seems to have dried up, and we didn't have a whole lot of momentum to start with. Come on. Here, I'll give you another little tickle higher. There you go. All right, boys and girls. I'm afraid I've got to shut the room down. Uh, I've got a doctor's appointment to get to, so I need to get ready for that. But if you are following the market the rest of the day, I don't know. Let me take a quick look here on the reports calendar. I'm not sure we have any reports pending. No, nothing. Not today. And tomorrow, existing home sales, but that's not usually enough to drive the market too far one way or the other. Oh, sorry, that was today. And there's nothing on the books for tomorrow either. All right, well, we'll leave it at that. If you are in this trade, take your time nursing it. If we can break 50.74, there is a good chance we're going to make a run at the high and probably get to the 50.78 area. But don't be surprised if we see it kind of drift sideways for the remainder or the better part of the session. All right, folks, I will catch you again tomorrow morning. We'll talk to you then. Bye for now.